When a stock rally is exhausted and a stock is consolidating around its all-time highs, it often trades in a tight channel where explosive upward moves are no longer available today in swing traders. I'm Seth Freudberg, the head trader of SMB Capital's options trading desk here in Manhattan, and we're contacted all the time by traders who want to learn techniques for making money when stocks are not moving dramatically, which is a situation that comes up a lot in the markets. In this video, we're going to show you an example of an absolutely extraordinary return that was available trading Amazon this year that most traders would have missed. So if that sounds interesting to you, then stick around because I think you're going to find this surprising. Hi, I'm Seth Freudberg, and I'm the head trader of SMB Capital's options trading desk. SMB Capital is a proprietary trading firm located in Midtown Manhattan, and we provide capital for options and equity traders from all over the world, trading both remotely and in our offices here in New York City. Now, I'd like to suggest that you click on our subscribe button right now so that you don't miss any of our free trading videos that we produce for traders and investors all over the world. They're really very valuable. Okay, so it's not news to anyone that Amazon benefited immensely from the lockdown in 2020 and the shift in our society to online shopping. And as you can easily see, Amazon stock doubled in the 6-month period from March 1st to August 31st, 2020. However, in September of that same year, Amazon got stuck in a 600-point channel between 2,900 and 3,550 for the rest of the year. Now, most traders would find a channeling stock a little bit more difficult and challenging to trade, as you won't normally get the explosive moves off of which day traders and swing traders can make such big money. But options income traders have a way of capitalizing in surprisingly profitable ways in these situations, and in this video we're going to show you a pretty stunning example of that. Now, in order to teach you this strategy, we need to make sure that everyone watching this video understands how stock options work. Now, I realize most of you probably know something about them, but just for a quick review, and this is going to be fast, what's known as a call option on a stock entitles the buyer of that option to purchase 100 shares of that stock at a certain price called the strike price of that option, regardless of what price the stock is actually trading at any time before that option expires. What's called a put option, on the other hand, entitles the buyer of that put to sell 100 shares of his stock that he owns at the strike price of that put, again, regardless of what price the stock is trading at any time before that option expires. The buyer of the option pays what's called a premium to the seller of the option because the seller of the option is taking the risk that the stock will go past the strike price of the option, in which case the buyer can exercise his option. So in the case of a call, even if the stock has gone way above the strike price of the call buyer can exercise his right to buy 100 shares at that strike price. In other words, he's entitled to buy the shares way below market. He could flip them the next minute and make a huge profit on those shares in that case. Or conversely, on the put option, even if the market goes way below the strike price of the put option, the buyer of that put has the right to sell his shares of that stock at the strike price of the put option that he's bought, even if the stock price has gone way below the strike price of the put, which effectively puts a floor on how much he can lose owning that stock. Now, on the other hand, at expiration, if you've sold a call and the market closes below the strike price of the call, then unless the call was previously exercised, the call expires worthless and the call seller just pockets the premium. Similarly, if you've sold a put and the market closes above the strike price of that put, then unless the put was previously exercised, it expires worthless and the call seller just pockets the premium. With that as background, let's move to the first trading day in January of 2021, which was January 4th. And as you can see, Amazon is trading right below 3,200 on that day. So let's suppose that around the close of that day, we looked out to an options chain about 6 months out, expiring on July 16th of that same year. And we decided to sell 2 Amazon calls way up at 3,800, more than 600 points above its current price. And then above that, we bought 2 Amazon calls 100 points higher at 3,900. Then simultaneously, we also sold 2 Amazon puts way down at 2,600 and bought 2 Amazon puts 100 points further below that at 2,500. Now, this combination, a short call above the market, a short put below the market, flanked by a long call higher than the short call, and a long put below the short put, that entire structure is what options traders refer to as an iron condor. And when the short calls and short puts are 1,200 points apart from each other, as they are in this case, then that is what is known as an iron condor that is 1,200 points wide. And as you can see, that means that both of the calls are way above the all-time highs of Amazon, and the puts are at price levels 300 points below that pretty obvious support level at 2,900. Before we get into how this Amazon Iron Condor trade plays out, I wanted to let you know that if you wanted to learn 3 option strategies that our pro traders use, including the unique options trick that allows you to make money while you wait to buy stocks or ETFs at the price you want, the options income strategy that allows you to make consistent money whether the market goes up, down, or sideways, and how to make money on a stock or index trade even if you're outright wrong on the direction, then click the link that should be appearing now at the top right corner of your screen. That will open the free workshop registration page in a new window, so don't worry, you won't lose this video. Or you can register directly for free at optionsclass.com. Believe me, you don't want to miss this, so pause this video, sign up now, and then resume watching. Okay, so let's first break down what's happened here from a cash flow standpoint so you can understand the essence of how this trade works. And as you can see, selling those 2 short calls up at 3,800 brought in $27,610 in cash because they cost $138.5 per share, and each option represents 100 shares. So you multiply that by 100, and we sold 2 of those, so that resulted in $27,610 in cash inflow. For protection, we bought those 3,900 calls, and those cost $23,670, as you can see from the calculation. Then we moved down to the 2,600 puts, and we sold those, which brought in $19,630 in cash. And finally, we bought those puts down at 2,500 for protection, which cost us $15,530 for a total cash inflow from the Iron Condor trade of $8,040, for which your broker will require you to have $11,960 in your account, which also is the worst case scenario loss for the trade. Okay, so now let's move forward about 6 months to June 30th. And as you can see, Amazon continued to trade in that same range through the first 6 months of the year, never getting any higher than 35.54 and never dropping below 2,900. And so let's take a look at what would happen if the trader decided to close the trade at this point. Well, the way that you close an option strategy like the Iron Condor is to buy back the options you've sold and sell the options that you've bought. In other words, you reverse the original transaction. So let's see what the cash flow of that transaction would look like. And in order to do that, let's first take a look at the pricing of the options that we're trading here. And as you can see, the 3,800 and 3,900 calls, which were both worth over $100, have now dropped to under $3 in value. And the 2,600 and 2,500 puts, which were both worth over $75, are now worth $1.4487. Almost nothing, in other words. And why did they drop so much in value? Well, think about it. There are only 17 days to go, and so it would take a huge and pretty unlikely move for Amazon to rally to 3,800 or down to 2,600, given that it's trading at 34.40 17 days out from expiration. And so the value of the right to buy Amazon at 3,800 or 3,900 is almost negligible, and the right to sell your Amazon shares for 2,600 and 2,500 are similarly of no value because the options are much more likely to expire with no value in 17 days. And so to understand how this trade concludes, let's first remember that we initially collected $8,040 for entering into this Iron Condor trade. We then would buy back those 3,800 calls for $2.46, and using the same formula as before, that would cost us $492 to do that. We then sell off the near worthless 3,900 protective calls, which brings in $402. We'd also buy back the 2,600 puts for $288 and sell off the 2,500 puts for $174, resulting in a final profit of $7,836 in less than 6 months, a return of 65.5% on the capital originally required to enter into this trade in the first place. And so what I'd like you to take away from today's video is that there is a powerful options trading style known as options income trading that often prospers while day and swing traders are suffering because of a lack of movement on stocks that they'd like to trade. So if you have techniques like the Iron Condor in your playbook, then you can take advantage of situations like this channeling of Amazon stock in 2021 and cash in with a really outsized return like we did in this case, a return you probably wouldn't have thought was possible for a stock that wasn't moving very much at all. Now, just to remind you, if you're serious about your trading, you need to check out the free intensive options class that we're currently running, where you'll learn 3 real-world option strategies that our professional options traders use all the time. Just click the link that should be appearing now at the top right corner of your screen, or you can just head on over to optionsclass.com to register for this free workshop directly. It's really a rare opportunity for retail traders and investors to learn directly from Wall Street traders, but that's exactly what you'll be getting through this free online workshop. So click the link to sign up now before you miss it. And please don't forget to click on the subscribe button right now so you won't miss all of the free trading videos that we're posting constantly on our channel to help you to improve your game as a trader.